See, I wouldn't like to comment on a specific stock because I may have a vested interest. But the fact is that you have to be really careful of everything that's bouncing back. As I said, that you just mentioned some PSU banks which are down right now. You must remember that the PSU bank index was up 22% last week, and many of them didn't have a reason to be there. So a lot of stocks are just coming up because they are very beaten down, a kind of a reflation trade that is happening. So this is, I think, the big test for me as a fund manager. Obviously, my portfolio is skewed towards quality and stocks that have held out very well in the fall. Now the thing is that in the last week or two, you find that a lot of other stocks which you don't own, in fact, which you would be very happy to sell, are shooting up massively, and you feel left out. You tend to underperform. At this point, I think we have to keep our nerve and understand and go back to our fundamentals and go back to really performance. Just hope trades are not good enough. They do come up, but they will also settle down very fast. That is why you see the day the market will be down, these stocks will fall disproportionately. And you have to hold your nerve. I feel that, yes, there is short-term optimism, etc., but beyond some time, the economy has to restart. Everybody has to go back to their businesses and accept the realities that there are. And unlike the US, which has had massive fiscal support, massive monetary support, in corporate India is not in such pink of health. They had problems earlier, and I think they will be deeper down. So you will have to be very, very careful in what you pick. Just because something is beaten, or something has become very cheap, doesn't mean it is good. So I still feel, or that's my strategy, is to still focus on quality and look at those stocks that can weather the storm. The storm is not going to end in a month. It can take 6 months, 9 months, financially, economically. And India has weak macros. That is a reality. So I think that we are happy to underperform in the short term, but not compromise the quality of your portfolio. It is very tempting to do that cute little trade and get a stock that's up 20% in 2 days, but you have to be very, very careful. And I, for one, am really holding my nerve because I know that when markets correct, you will realize that even quality will emerge. And where there is earnings, where there's performance, there's no denying that that's where the trends are in the long term. Though, as I said, in the short term, we've had an oversold rally.
One sector where almost all of this will converge selectively, especially, is pharma. Atul, and we've had a start of a fresh bull market in pharma. You think this is just the beginning of a new move, or was it just a tactical move which played out? How would you classify some of these big pharma moves?
I personally think, Anuj, it's going to be a big move. I'll tell you the reason is that if you look pre-event, pre to 2020, pre-COVID, you'll realize that first of all, pharma was an unknown sector. Post the 2015 US FDA issues, most of these pharma companies pharma was underweight in everybody's portfolio. So there's one very, very important thing for a sectorial bull market to happen is under ownership. And pharma was definitely under owned. We also had about a 5% weightage towards pharma. But what has changed is not just an event, but it's an habit. You have to look that an event like this changes business models and changes consumption habits. And these habits last for years to come. And I think that the investment in healthcare, whether it's at a government level, institution level, individual level, is going to be top of the list. I mean, just look at the amount of people who walk, who are taking multivitamins. And I think this is not just going to go away in a week. People are really understanding or appreciating health as priority number one. And linked to that is pharma. So I think that pharma has the makings of a very large bull market. Yes, it has been the top performing sector at the moment. It may rest a little bit, but the fact is that I feel going ahead, it's going to be a secular theme, a theme that was under-owned, a theme where I think habits are going to change. And I think that most importantly in India, where we had a lot of US government onslaught with FDA, etc., I feel that pressure will come off. So I feel that this has the makings of a leadership sector, a trend, what I call, or a marathon trends. And that is why I think we are overweight pharma as a sector at the moment.
Okay. Atul, by the way, I'm surprised Anuj didn't tell you that he actually started today's show quoting Stanley Druckenmiller. So we were also analyzing the same left out feeling that may be pushing up this market although it's liquidity driven. But anyway, Atul, I wanted, on pharma, there can be a consensus. It was under-owned and the health dynamics are changing. But how do you approach a sector like autos? I mean, even their lifestyle changes are going to impact, but will anything be positive? Is that a sector of choice at all?
I don't think it has the makings of a massive rally or a thematic move like you're seeing in pharma. Autos may have a relief rally because a lot of people are saying that, what we were anticipating, public transport, etc., people will move to private. Yes, there may be a little spurt in smaller ticket purchases, but I really don't think that people are going to, just go out and go crazily overweight autos. You may, as I said, have a pent-up demand. Yes, you may have a lot of first-time people who are using public transport move towards private automobiles. But I think that will be a short-term thing. When you look at a longer-term trend, you're looking at 3 to 5 years minimum. And I don't think that I have that kind of clarity, because the key thing for us, or how we are really thinking, is that in the post-COVID world, a lot of habits are going to change. And we are seeing it in our own household. Another sector, for example, telecom. I mean, I can assure you, without knowing any of your home patterns, that the amount of bandwidth that you're using has doubled, trebled. And that goes for every viewer's household. I mean, if you are taking a silver package with some telecom company, you move to gold and diamond. So this is a habit that is going to change forever. What are you using for entertainment? The kind of streaming that you're seeing on your television sets, whether it's a Netflix or an Amazon Prime or whatever. So what I am looking for are themes or changes in habits. And these are structural. These are structural that will rechange business models. I mean, Zoom, we can't invest in Zoom, but just imagine, it's just become a generic term. So I think that COVID is going to reset the way we do many things. And for us, we have to look for those things which are habit changing. Because once you get a habit changing theme into your portfolio, you can ride it for 3 to 5 years. And that is, I think, a fantastic journey to be in. So that's really my focus. It's not about 1 month numbers or 2 months numbers. It's about where we are going to do things differently. And if we log into those themes, I personally think that there's a lot of money to be made as an investor.
Okay, I want to take that theme forward, habit changing, because a lot of it has happened. But just take a look at the markets. It's selling off quite fast, actually. The Nifty is down about 25 points now. The Bank Nifty is down almost 200 points. Don't lose sight of that. HDFC Bank is down 1.5%. So that's been the big drag. And SBI, Reliance are the other big laggards. I'll go across to Anuj in a bit. But before that, Atul, to talk about these habit changing patterns. I have, for example, never eaten biscuits in my life, and now every week I order biscuits just because in lockdown sort of your preferences have changed. Do you still bet on some of these FMCG stocks, say Britannia, HUL, ITC? You briefly mentioned it earlier, but I want to know from here on, are they still buys for you?
I think so. They are, I think, very long-term secular stories. And in fact, in India as a country where we are in terms of the economic cycle, in terms of the wealth effect, I think this food or processed food or packaged food and a lot of other FMCG things have a many years to go. The thing is that in the short run, they may have run up too hard and they may correct. It is a more a case of valuation. But I personally think that these are secular themes. Consumption has created the maximum wealth, I feel, in the last decade or decades. And I think that it will keep on changing, because the more and more you have a wealth effect in the country, you realize that our consumption changes. And as you said that you've been eating a lot of biscuits, that is really happening in every household, like whether it's biscuits or some snacky food. I mean, my house has never been as stocked as it ever has been. And I think they're going to consume a lot more sitting at home. The amount of time we went out to restaurants and things like that, cafes and bars, I think entertainment is going to move a lot more home. And linked to that are going to be these packaged foods, because that's what we're going to consume, whether it's going to be fries, chips, nachos, dips, etc. So, I mean, just this is a very generic discussion, but I think that habits are going to change. And if we log into these habits, what I said earlier, I think that's going to be very, very crucial. And things are going to change. This event has impacted us, and we will see how it pans out in the next few months. I would look beyond a 1 month, 2 month kind of story, and I would look for a 3 to 5 year theme. And I think that is what happens in every bull market that happens. It precedes a bear market of 40% fall. With that emerge new sectors, new themes. And I think that the footsteps or the seeds of the next bull market are sown in the previous bear market. And if we are able to pick themes and sectors that lead, which I think pharma is one of them, I feel that the next few years can be fantastic.
Okay, we are running out of time, Atul, but can you